All right, so buckle up, everyone. It's time for another deep dive into the world of finance. And let me tell you, things are looking, well, they're looking kind of interesting, to say the least.
Yeah, I'd say that's a pretty good way to put it.
It's December 9th, 2024, and we're coming off a week where the U.S. markets just, went crazy.
Yeah, they really did. Record highs across the board.
Seriously, the Dow, the S&P 500, and the NASDAQ, they all hit those record highs last Friday, December 6th. I mean, that's got to be good news, right?
Well, on the surface, yeah, it definitely looks good.
But hold on, because then we've got this whole other thing going on with today's pre-market futures. And, well, it's painting a bit of a different picture, isn't it?
It is. It's a bit of a mixed bag.
Yeah, mixed bag. So tell me, like, for those of us who aren't, glued to the financial news every second, what does this mixed bag actually mean?
Well, we see Dow futures are slightly up, which
Hmm.
is good, but the S&P 500 and the Nasdaq futures, they've actually dipped.
Dipped, huh? So does that mean, like, are we headed for a correction? Is that what we're talking about here?
Okay, so it's important to remember that right now, the markets are what we call priced for perfection.
Priced for perfection. Okay, so what does that even mean?
Well, basically, it means that investors, they've already factored in like a ton of good news, and they're expecting things to just, keep going up and up.
So, like, any little hiccup, anything goes wrong.
Exactly. Even a tiny bit of negative news, it could spook those investors and lead to a sell-off.
A sell-off, oh boy. So, yeah, I guess maybe hold off on the champagne for now, right?
Yeah, maybe just a little bit. But speaking of high expectations, we can't ignore what's been happening with tech stocks. They've been all over the news, haven't they?
Seriously, our sources are just filled with these incredible performances, and it seems like all that optimism, a lot of it's being fueled by this, AI craze.
Yeah, artificial intelligence. It's the big story right now. We're seeing so many advancements, and investors are getting really excited about the potential.
Absolutely. I mean, look at Salesforce. Their stock jumped 11% just because they beat their revenue expectations. And then you've got Marvell Technology. Their earnings report sent their stock soaring over 23%.
Right. It just shows you how powerful this whole AI narrative is right now.
And this is a big but, I mean, even with all this excitement, the tech sector can be super sensitive, can it? Like, any little piece of bad news.
Oh, absolutely. It's very sensitive to anything negative.
And it's funny you say that because we have a perfect example playing out right now. NVIDIA. Their stock is down more than 3% in pre-market trading. Why? Because of an antitrust investigation in China. I mean, talk about a reality check.
That's a good example of how quickly things can change, especially in tech.
Definitely a reminder to, maybe not get too carried away with the hype.
Mhm.
So, with all this going on and, the market kind of teetering on the edge there, what are we looking out for next?
Well, everyone is definitely waiting to see what happens with the November CPI data. It's supposed to be released on Wednesday.
The CPI, right, Consumer Price Index. But, okay, help me out here. Why should the average person, the person listening to this, why should they care about the CPI?
So the CPI, it basically measures inflation. And inflation, well, that affects everybody. I mean, think about it. It affects how much you pay for groceries, gas, everything, really.
Yeah, okay, I get it. Inflation hits everyone's wallet.
Exactly. And it also plays a big role in what the Federal Reserve decides to do about interest rates.
Okay, speaking of interest rates, our sources are saying there's a pretty high probability, like 88% of the Fed cutting rates by 25 basis points on December 18th. That sounds like, good news, potentially.
Well, it could be, yeah. But we have to remember what Fed Chair Powell has said.
Ah,
Don't expect those rate cuts to happen too quickly.
right. So no need to celebrate just yet.
The Fed is in a tough spot, you see. They're trying to keep inflation under control, but they also don't want to hurt economic growth. It's a delicate balance. If they cut rates too fast, it could actually make inflation worse in the long run.
So they're being cautious. I get it. And, speaking of things that can, like, throw a wrench into the works and add to all this uncertainty, we can't forget about what's happening globally, right? All the political stuff, it can definitely shake things up in the market.
Oh, for sure. I mean, when investors see instability somewhere in the world, they get nervous. And that can lead to some, volatility in the market.
Exactly. I mean, just look at what happened recently in South Korea. All that political turmoil caused their main stock index, the Kospi, to drop 2.3%.
It really highlights how interconnected the global markets are. What happens in one part of the world can definitely affect the rest of us.
Yeah, it's like this giant web, right? And then you have situations like, oh, what was it? The recent ousting of the Syrian leader Bashar al-Assad. These kinds of events, they just add another layer of complexity to everything.
They do. I mean, they can impact oil prices, trade relationships, even just the overall mood of investors.
It really makes you realize that investing isn't just about numbers and charts, right? It's about understanding the whole world, the bigger picture.
Absolutely. It's about understanding that the world is complex and unpredictable, and that those complexities, they directly impact the financial markets.
Okay, so we've got a lot on our plate here. Record highs, but also this potential for a correction. The tech sector, which is both super exciting and kind of scary at the same time. Inflation worries, and then, of course, all the global uncertainty. Did I miss anything?
Well, there's one more thing we should probably talk about. What about Bitcoin?
Ah, Bitcoin. It's like the elephant in the room, or maybe the digital elephant in the room, I guess you could say.
It's hard to ignore, right? I mean, it just keeps making headlines.
It does, and for good reason. I mean, it just hit this new all-time high, went over $103,000.
Pretty incredible. Although it has come down a little bit since then. It's trading around $99,600 right now.
Still, that's a pretty impressive run. So what's driving this surge, and what does it mean for all those people out there who might be thinking about, dipping their toes into the crypto waters?
That's a fantastic question, and one I think we should definitely delve into in the next part of our deep dive.
Sounds good to me. We'll be right back after a quick break. Okay, so we've laid out this crazy market landscape. Now I want to zoom in a little bit. Let's talk about some of the companies that are, really making waves. We touched on those big successes with Marvell Technology and Salesforce, especially with like on this AI hype going on. Are there any other companies that are, catching your eye?
Oh, absolutely. I mean, those are definitely great examples of how this whole AI thing is playing out. But you also have a company like Palantir Technologies, and their stock has just been, I mean, it's gone through the roof this year.
Really? Like how much are we talking?
We're talking over 290%. That's some serious growth.
290%. Wow. Okay, I've heard of Palantir, but I got to be honest, I'm not really sure what they do. What's their secret? What's their like special sauce?
They're kind of like those tech companies you see in spy movies.
Oh, okay.
They
Interesting.
specialize in big data analytics and software solutions,
Mhm.
mostly for government and intelligence agencies, although they are starting to branch out into the commercial sector too.
So like they're helping catch spies and, stop terrorists and stuff.
You could say that,
No
yeah.
wonder they're doing well. But okay, this brings up a question for me. If a company is so focused on those government contracts, what happens if those contracts like dry up? What happens then?
That's a really good point, and it's definitely something to think about if you're, considering investing in a company like that. High growth, especially in a niche market like Palantir's, it often comes with, higher risk.
Okay, yeah, risk and reward. It's always a trade-off.
Exactly. And that's why, before you jump on any bandwagon, you really got to do your research. Look into the company's business model, their financials, all that stuff.
Right, right. Don't just get caught up in the hype.
Exactly. You got to understand what's actually going on under the hood.
So, okay, let's say I'm interested in doing that research, but I'm not like a financial expert. Where do I even start? What should I be looking at?
Well, you could start with the basics. Look at a company's earnings reports, their revenue growth, their debt levels, things like that.
Okay, earnings reports, revenue growth, debt levels. Got it.
And remember, don't just focus on the stock price. Try to really understand the underlying business. What are they actually doing? How are they making money?
Right, right. Makes sense. And of course, don't forget that old saying, don't put all your eggs in one basket.
Exactly. Diversification is key.
Diversification,
Yeah.
right. Speaking of baskets and maybe slightly cracked eggs, can we go back to NVIDIA for a minute? We talked about that antitrust investigation in China, and it just seems like, I don't know, a pretty big deal. If I own NVIDIA stock, should I be freaking out right now?
Well, it's definitely something to keep an eye on for sure. China is a huge market for any tech company, and any kind of regulatory issues there, yeah, those can have a big impact.
Okay, so not freaking out, but definitely paying attention.
Exactly. But remember, a single news event, even a big one, it doesn't necessarily mean it's the end of the world for a company.
Okay, so don't panic and sell everything at the first sign of trouble.
Right. Take a breath, assess the situation, and then make a decision.
All right, good advice. So we've talked a lot about tech, which is, super important and all, but are there any other areas, any other sectors that you're like keeping an eye on? Anything outside of that tech bubble?
Yeah, definitely. I mean, tech gets a lot of the attention, but There are, opportunities in other places too. For example, you have a company like Northern Trust Corporation. It's a financial holding company.
Northern Trust Corporation, okay. And what's happening with them?
Well, their stock has actually gained almost 23% in the last 3 months.
Wow, that's pretty impressive
It
too.
is, yeah. They're known for having really strong management, consistent profitability, and they also benefit from the overall strength of the financial sector.
So kind of a different story than those high-flying tech stocks, huh?
Yeah, exactly. It's more of a steady, reliable kind of performance.
So if you're like a little more risk averse, maybe a company like Northern Trust is a better fit for you.
Could be, yeah. It all comes back to, understanding your own risk tolerance, your investment goals, all of that.
Right, right. It's not one size fits all. Okay, before we wrap up this part of our deep dive, I do want to circle back to that Bitcoin question. We talked about those record highs, then that little dip, but still, a lot of people are probably wondering, like, is it too late to jump in? Or have they, missed the boat?
Yeah, Bitcoin it's fascinating. It's a whole new asset class, really, and it's incredibly volatile. I mean, think about it. The total value of all digital assets is estimated at around $3.5 trillion right now.
Wow, trillion with a T.
Yeah, it's huge. It shows you just how much this whole space has grown. But we got to remember, cryptocurrencies, they're still relatively new, and there's a lot of uncertainty.
So it's not just about the potential for, making a ton of money. There's also that potential for losing a ton of money, too.
Exactly. If you're thinking about getting into crypto, you got to be prepared for a wild ride.
Buckle up.
Yeah, buckle up. Do your research, understand the technology, and, the golden rule, never invest more than you can afford to lose.
Words of wisdom right there. Okay, so I think we've covered a lot of ground here, from those, super exciting AI-driven tech stocks to those more steady and reliable financial companies, and then, of course, the always unpredictable world of crypto. But with all that in mind, what does it all actually mean for the average person who's trying to, figure out this crazy market? What are the big takeaways?
That's a great question, and it's one we'll definitely address in the final part of our deep dive.
Okay, so we've gone through a lot. Record highs, potential corrections, tech stocks going crazy, global events shaking things up, and of course, Bitcoin doing its, well, Bitcoin thing. But now, let's get down to brass tacks. What does all this mean for the everyday person, the listener, who's trying to make sense of this financial roller coaster?
If there's one thing you take away from this whole deep dive, it's this. Staying informed is absolutely critical. Don't just rely on those, sensational headlines or those random conversations you overhear.
Right, right. No water cooler talk.
Exactly. Dig deeper. Understand what's actually happening. Do your research. Because knowledge, it really is power when it comes to, navigating this crazy world of finance.
So you're saying, like, become a financial news junkie. Is that what you're getting at?
Well, I wouldn't say you have to go that far,
Hmm.
but make it a habit to check in with those reliable sources. You know, get a handle on the basics of investing, learn about those companies and sectors that you're interested in. The more you understand, the better decisions you'll make.
That makes sense. But even if you do all that research, the market can still be, well, unpredictable.
hmm
There are just so many factors involved. Things change so quickly. How do you deal with that? How do you handle that uncertainty?
That's where diversification comes in. Don't put all your eggs in one basket, right?
That's what my grandma always used to say.
Smart grandma. Spread your investments across those different asset classes. Stocks, bonds, real estate, the whole gamut. And diversify within those asset classes too. Invest in different sectors, companies of different sizes. Even think about international investments.
So basically, if one investment takes a hit, the others will, like, help soften the blow.
Exactly. Think of it as building a safety net for your portfolio. Diversification, it's one of the best ways to manage that risk and protect yourself from those sudden market swings. It helps you ride out the storm and stay focused on those long-term goals.
Okay, that makes me feel a little better. But what about those people who, they actually like the risk, the thrill of it all? Those people who see volatility as an opportunity, who are drawn to the potential for those big, big rewards, even if it means taking on more uncertainty. What do you say to them?
I say go for it. But, and this is a big but, do it with your eyes wide open. If you're attracted to those high growth sectors like tech, or you're, lured in by the siren song of crypto, make sure you really understand what you're getting into. Look at the long-term prospects, understand the risks involved. Don't just follow the hype. Look for those solid fundamentals and a good strategy.
So do your homework and be prepared for a bumpy ride. Sounds like good advice for anyone, whether you're a seasoned investor or just starting out. But as we wrap up here, I keep coming back to this idea of uncertainty. It just feels like the markets are like on a knife's edge, just waiting for that next piece of news to send them either soaring or crashing. How do we stay grounded amidst all this chaos?
Here's one final thought, and it's super important for any investor. Don't let fear or greed call the shots. When the market's booming, it's tempting to get caught up in the excitement. You might make impulsive choices.
Yeah, you get that FOMO, right? The fear of missing out.
Exactly. But then when the market tanks, fear can take over, and that can paralyze you. It can lead you to sell at the absolute worst time.
So basically, don't panic and don't get greedy. Easier said than done, I think.
Oh, absolutely.
Yeah.
It's tough. But the key is to focus on the long game. Create a solid investment plan, one that's based on your goals, your risk tolerance, and your time horizon. Then stick to it even when things get rough. Investing, it's a marathon, not a sprint.
Right, slow and steady wins the race. So, to sum it all up, stay informed, diversify that portfolio, invest strategically, and don't let those emotions take the wheel. Anything else we should keep in mind as we navigate this crazy financial world?
One last thing. The financial world, it's constantly changing. What's true today might not be true tomorrow. So stay curious, keep learning, and don't be afraid to adapt your strategies when you need to. Investing, it's a lifelong journey, and there are always opportunities to learn and grow.
Well said. And on that note, I think we've reached the end of our deep dive. We hope you found this insightful, maybe even a little bit empowering. Remember, you don't have to be a financial whiz to make smart decisions with your money. Stay informed, stay engaged, and most importantly, stay curious. Thanks for joining us.